Hi, welcome to Market in a Minute. Today, we'll recap market last week and we'll be taking a closer look at the current market landscape. DeepSeek has launched its AI model, R1, which is similar to ChatGPT in performance. However, it was developed with an extremely lower investment. This new AI player made NVIDIA have the biggest drop in the history of the stock market. $600 billion. Impossible not to be impressed about this. But we might remember that 8 of 10 of the biggest drops in stock market have NVIDIA as its protagonist. And the stock has always bounced back. Trump's tariffs confirmed. Last Saturday, Donald Trump confirmed their first tariffs. 25% on imports from Mexico, Canada, and 10% on China. After an electoral run praising an economical policy, its first act came this weekend. This 25% tariff could increase the prices of cars, gas, goods and services across all the US. Mexico confirmed it will retaliate and also impose tariffs on the United States. ECB, FED, and euro-dollar parity. After a week of interest rate decisions by the Fed and ECB, euro-dollar exchange is getting closer to parity. The Fed kept their interest rate unchanged, and the ECB chose to cut it to 0.25%, moving forward to their goal of 2% inflation until the end of this year. Both monetary politics are working for the same purpose: keep inflation trends low and controlled. But in other ways, these two major indicators can drive the euro-dollar near parity, as the dollar is still rising against major pairs, in response, of course, to Trump actions. Market ahead. Retail sales year-over-year, Europe. After a substantial drop in inflation from 2.9% to 1.2%, the ECB possibly will meet the German retail sales data, which also showed a decline from a forecasted 2.5% to an actual figure of 1.8%. If the broader Eurozone data aligns with Germany's retail sales performance, it could indicate slowing consumer spending across the region, supporting future rate cuts. BOE interest rate decision, UK. After a week of gains from the dollar against the pound, Bank of England is preparing a rate cut on the upcoming next Thursday meeting. Like the ECB and the Fed, the Bank of England is aiming for a steady inflation rate of 2%, a target that seems within reach. However, a decrease in inflation could justify the next 0.25% rate cut. Nonfarm payrolls, US. With the first payroll report of the year approaching, this release will be crucial to watch. Powell has previously stated that a weaker employment report wouldn't necessarily derail inflation targets. This report will be the key indicator for the market to assess the likelihood of 2 Fed rate cuts this year, followed by the manufacturing and private employment reports, due on Monday and Wednesday. These events are likely to influence the euro-dollar currency pair, so make sure to stay alert and capitalize on the opportunities. Stay tuned with Excent Capital. Good trades.